Hello everybody, Brian here from Quantlabs.net. I just want to show you our latest edition, second reports daily for ETF and stock analysis that we are now posting as part of our paid subscription on Substack. So let me show you that right now. Alright, so I'm going to show you TradingView. So here's TradingView. So let's start with some references. Namely, we have here the SPY, and I'm going to clear off some of these ETFs here. So I'm going to show you the SPY, and then I'm also going to throw in this for the last month, okay? And I'm also going to show you the probably number one stock of the year, NVDA. Okay, and here we go. So now you can see for the last month NVIDIA's performed 5.4%, okay, which is not bad compared to the SPY, which is a standard benchmark now, negative 3.26. Okay, so when you look at that, those are your standard benchmarks for the last month of performance. One note here is how the market beat expectations for NVIDIA, and look what happens. It drops back down pretty well to the same prior level, pretty close at least. So that shows you the amount of negative pressure that there is in the markets, where even NVIDIA is struggling. But what I'm going to show you is the new list, the top, 5 or so stocks available. These are very important because this is how and why this thing that I'm doing paid is very, very valuable. So the first thing you'll see here is today we can scan, let's say, close to 2,000 stocks, and right there at 1973. So these are all the different stocks available. And what we do is very important to understand is that what we do is we've got them all no different than factor investing, I guess, with the symbol, the average returns of the last 20 working days, same with the last 50 working days. This is the volatility. So these are fairly high for all these stocks to cut the mustard for my way I filter things out. Then we have the closing price of the last trading day. Recommendation, which is going to give you a metric of 6, is generated from Yahoo Finance. These are fairly strong. The other one that's very important is to understand these are forward guidance. Okay, these are recommended stock analysts saying strong buys, sell, or strong sells. Here you have the number of analysts suggesting strong buy, and sell, and strong sell. Also, from a technical analysis perspective, that's very reliable, is the Arun up. So what you want to see is anything at 100. So when I show you the better low volatile stocks, the winners, the performers, you'll see the difference. So when you see 100, that's a very strong sign of potential breakout or upward momentum in the stock. And the Arun down is basically a measurement of it doing very negative. So you can see how high a lot of these are. And these are the so-called top performers. Okay. Now, a lot of people use these stock symbols, and they're going to probably lose money, to be truthful. But when you filter out the low volatile stocks, which is right here, we've now gone from 2,000 to 31. And you'll see the difference here between the Arun up, all 100 are pretty close to it on the breakout for 100, and more importantly on the Arun down, a lot of them are 0. That's what you want to also see. Not only that, you see the recommendations looking not bad, but this is the important one right here as well for forward guidance. So we have many strong buys, and these are from institutional analysts, Bank of America, Goldman, like strong buys, number of buys right here, right? Not only that, we have the number of sells, which is 0. That's what you want. You don't want anyone recommending them on a sell or even a strong sell. So all of these are pretty well 0. Okay, so that's very strong. That lowers the probability of having a negative whipsaw go against you in a negative, in an open position. At least it minimizes it, we should say that. And then of course we have our closing price. So in here I'm going to show you the top 30, top, I don't know, 5 or 6 to show you how this subscription will pay for itself very quickly. So as I said, we're going to go to the trading view here. We've got NVIDIA up as a reference for the last 30 days, 5.4%, and the SPY at negative 3.26, which is the standard benchmark. So let's get to it. All right, so I'm going to move this to the side, the spreadsheet here, right here. So I'm going to show you the top 5 and the difference between these. These are so important. So the first one we have is Eli Lilly. So this is a big expensive stock at $500. I probably wouldn't trade it, but look at the difference here. Eli Lilly for the last month up 21%, and actually I should do this. So I'm going to include the SPY. It doesn't matter. We already know that SPY's negative as well as the benchmark. We'll just use in this case the NVIDIA. So you can see here how Eli Lilly is 21 times more valuable for the last month than NVIDIA with a 1% return. Okay, that's over the last month. So next one we have is PSN, Parsons Corporation. You see how low that value is. So it's 22 versus 20% for the last month, right? And right here is where it starts to outperform. So not bad. The next one we have is NHC. So National Healthcare Corporation. So we're looking now at a monthly view, okay? So when you start to see NVIDIA go negative and kind of go flat in a way, you can see here that NVIDIA 6.4%, NHC last month is now double. That's over the last month. That's why you have to really tightly watch your returns, because you'll get better, stronger returns when you watch it more. And again, let's look at another company, Regeneron. This is a very expensive company. You see here 12% versus NVIDIA 0.75, so that's about 12 times. We'll just be in terms of performance. But again, this is about Regeneron is a very expensive company here. On the close right here at $840, the last price right there, $840. That's expensive. I wouldn't hold that, but it's there if you want it. The next company we have here is TW. TraderWeb right here, 14% versus 3.67, so we'll call it almost 4 or 5 times. Another one, CEG, Constellation Energy Corporation, 0.02 versus 11% for CEG. And we'll do one more, FTAI. This one's not so strong, but it's still, so it's FTAI Aviation, so it just barely beats it by 2%. Okay, so there's that, and let's get into the ETFs. So the ETFs, let me pull up the SPY again. And again, we can use this one, the NVIDIA, for the last month. So NVIDIA is up 5%, SPY's down 3.33% there. So as for our ETFs, this is what we got. So we got a couple here, about 5 or 6. First one's the big winner out of these ETFs is uranium, URNM. So you can see here that's Sprott Uranium Miners. Boom. So even that ETF outperforms more than double than NVDA in last month on uranium. Meanwhile, the SPY is negative. Now I want to show you like Treasury pretty well. So that means I'll get rid of the uranium. I'll just keep the SPY. So I'll get rid of NVIDIA. These are just pure ETFs. So we have a negative performing SPY ETF last month. So the first one we have here is USFR. These are the treasuries that are your typical defense plays that a lot of people are piling into. So that's a Wisdom Tree floating rate treasury fund. Up barely, but it still beats this thing, SPY. Next one we have is from PIMCO. This is Mint. These aren't very, very strong winners. So we have here PIMCO Enhanced Short Maturity Active Exchange Traded Fund. Boom, up 0.25%. And then we have another one called TFLO. So again, these are treasury. One of these I'm going to show you is fairly negative, but still beats SPY. So that's an iShare Treasury floating rate bond ETF, and there it is, 0.12%. Last one we have is SPSRLN. This was a negative one. So Spider Blackstone Senior Loan. So there's that, negative 2%. Get rid of that. I'll get rid of both of these. And we'll do one more, which is the Goldman called G-Bill. G-Bill. So that's Goldman Sachs Axis Treasury 0 to 1 ETF, up barely, but it's positive 0.05%. So there you go. So that's pretty well why you want to, especially on the stock side with the kind of performance we're getting. So once again, if you want to know, subscribe to my Substack. It's fairly new. You can do that at quantlabs.net/blog. Look at the top there. You'll see join our new Substack account. Put your email in there. Subscribe. Double opt-in. And then when you get that, you just come to quantlabs.substack.com/subscribe. You will not access this unless you're a subscriber to the Substack account. So in here we got the free monthly, subscriber only post in full archive, post comments, and community plus. There's 2 sets of reports I'm sending out daily. What I just showed you with the ETF stocks, and the other one for the CFD and forex for the overall global hot capital flow. Then when you get in the annual, which is $4.99, $4.97 US. We also throw in the deep ETF analytics. That's important as well. That gives you a full view of the ETFs over the last year. We have our master ETF mix as well that can do really well over the last year. And then we also have our, and then we also give you access to our private trading view scripts as well. So you like what you see in certain stocks or ETFs or any instrument really on TradingView. You can then run those. Once we invite you in, you can run those automatically against the TradingView server, and it'll do all your trades for you for all the supported brokers or exchanges available on TradingView, including Interactive Brokers and the WANDA. Founding member, this is $9.97 per year. Also gives you access to our various courses that we've got, plus our 10-year archive to our blog of over 10 years of educational private stuff. That's pretty well it. Hopefully you'll subscribe, just need your credit card and all that. Other than that, thanks for watching. Have yourselves a good day.